Hi, everyone. I'm going to be starting in just a moment. Eduardo, Marlene. All right, let's start. So welcome to the last of my 3-day live trade execution webinar series. My name is Mark Shawson, the Pattern Trader. If you weren't able to make it for the last couple of sessions, what I've been talking about is how to identify moves in the markets only looking at price action. So I always get asked the question, do I trade the news? And the short answer is no. We have more news, more event-driven markets than I can remember in quite some time. You know, there's a TV behind me with pundits talking all day long. Are we going to recession? How big of a recession? Is it a soft landing, a hard landing? Where's interest rates going? Where's the terminal rate going? All of this stuff. And, you know, you cannot trade that kind of stuff. This has been an extremely difficult market. And, you know, I never get to choose these 3-day live execution webinar series. They're live. Whatever's happening in the markets, that's what, you know, I'm hostage to. And that's what I try and work with. And even though it's been a very difficult market and really nothing has happened in the last 3 days, and yet I've been able to make some serious bank on markets that have barely moved, both up and down. And so it's just based on understanding where the levels are, where the patterns are, where the trends are. And this, you know, usually I can identify setups and explain them reasonably well. There's been a whole lot of nuance to what I've done this week. Some, you know, markets are bottoming out and yet they hit a resistance. And so they're back and forth in between. And so I've done a lot of things this week that are very difficult to explain. Now, I did put a link in the chat box. So every single day I do a pre-market session where I kind of explain what I'm looking at in the markets, what I'm looking to do in that particular day. And today, you know, I shared that the stock markets were in a very difficult range-bound area. I basically said, don't really trade this. But I said, what I'm looking to do is short the rally and then buy at a certain area. And that's exactly what I did. I'm going to explain to you why I did it, but I'm going to show you what I did, and I've made money doing that. But you know, if you look at that link, I explained it all before the markets opened. So I always try and have some kind of plan. You know, instead of reacting to the markets, you should come into the day with a trading plan. Understand where the risk rewards are and what you're going to do for that day, instead of waiting for the day to start, then letting the trading action suck you in, and then you just get caught in this emotional trap. And so it's just very important to plan your trades. So, you know, I talked about my philosophy this week that price is a discounting mechanism, price is ahead of the news. And sometimes, you know, there's so much stuff going on back and forth. There's nothing really going on with price other than just levels. And so I try and find the optimum levels to get in. This is the setup that I talked about. If you downloaded my book, which I put a link to yesterday, it explains this 4-step trading methodology where I identify the market trend. Is it an uptrend, a downtrend, sideways, turning? And this week you've had a little bit of everything. You had a resistance and you had a turning market. So what I try and do is I try and identify a pattern that is likely to govern the next trajectory of prices. And again, this week has been very, very nuanced. I've done some crazy stuff in here, but there's a method to the madness. So on Monday, I started by showing you that I was buying all these put options. I came in the week betting the stock market was going to open the week and start declining. And for the last 3 days, that's exactly what we've seen. So I made all these bets on the IGV, which is a software ETF, the triple Qs, which is the NASDAQ, and the S&P, which is the S&P 500. So I made a whole bunch of money on Monday. Tuesday, I missed my bets. I put limits in the market. I was betting the market was going to decline. I missed getting those orders off. And then I had the discipline not to chase the market. And today, I sold the market early in the day. So I bought puts on the triple Q. So when it rallied, I put a limit order on these put orders. I got hit at $1.85 and I got out at $3.11. So I made whatever that is, 60% of my money in the morning. And then in the afternoons, I went long. I bought triple Qs and the IGV, and I still have these trades on. So who knows what's going to happen tomorrow? I could lose all my money or I could make some. We'll see what happens. And I'll share with you why I did that. And on yesterday, I had all of these gold and silver and euro short positions. I got out of those trades. And then today I ended up with some long trades in the Dow Jones and the S&P. And I'm still long these trades going into tomorrow. So again, this has been a kind of a difficult week to really explain what I've been doing. So here's the link for the boiler room. I put that in the chat box. So let me kind of throw a couple of charts and share with you what I have been doing. So let me just try and dial this in a little bit closer. All right. So, all right. Yeah, I'm not crazy about being long right here at all. So this on the top chart is the triple Q, which is the NASDAQ. And on the bottom chart is the IGV, which is the software ETF. Now, today I bought this thing right here. I bought options right here, betting on the upside. I bought call options. You know, the more I look at this thing, not too crazy about that bet. But notwithstanding whether it works or doesn't work, sometimes I just fool around. These are not great markets right now. They're just really banging trading markets. You can see this is what's been going on in the stock market. It's back and forth every day. And, you know, I usually say don't trade a sideways market. But to me, there's still an underlying pattern here that, you know, all of a sudden could dictate prices and we could find prices going that way. And I'll know very quickly. I'm either going to be right or wrong right here. If it starts going south tomorrow, I'm getting out. And if it starts going north, I could start adding to my position. So this is, again, there's just a lot of concepts that come into the mind here. There's been a long-term downtrend in the triple Qs. And then on Friday, you banged right into the high end of this resistance, this huge long-term resistance level. So whenever you hit certain levels, the market usually observes those levels. Could be for 3 days, could be for 3 weeks, could be for a long time. But we hit an area here, an air pocket that told me that it was likely to go south. So on Monday, when the market opened, I started buying these put options, and a put option is really a bet on the decline. And then even in today, when we rallied in the morning, I bought more put options, And the reason I got out is that there is a very subtle little downtrend line that kicks in very close. Now, tomorrow you could still kind of go down here and bang down and to hit this, but there's a support line here. So there's, a resistance line here and a support line here, and you've got kind of this reverse triangle going on. Now, again, there are so many waves and counter waves here. And what I try and do is just make trades and then see what the market does within those trades. So a reverse triangle in and of itself is not definitive. It can be a continuation or it could be a reversal. It could go anywhere. But what I try and do is put boundaries around prices and then try and understand where the intersect is. So this is why I bought this thing right here, because you can see it just intersected with this downtrend line. And so I am looking at this two ways. This is a downtrending market, but we also have a bit of a pattern which suggests that this market could have put a bottom on, which means that, you could see ensuing price action go higher and then it could go lower. So this is where, you get caught into a couple of different things going on in the markets. And this is why it's so extremely difficult for me to explain everything. A lot of it just comes down to watching how these prices navigate these levels and then say, okay, is this going to hold or is this going to break down? And basically the market is the referee. Once I kind of start seeing the markets in these different areas, then I just let the market sort it all out. And frankly, I shouldn't have done anything. I made a bet, I made some money this morning, and, this is not really a great buy signal, but anyhow, I'm long. Now, in terms of the IGV, this market has also been going lower. It looks really terrible on the long-term chart, but underneath the hood is this pattern. And until this pattern is taken out, this could be a trap in here where this thing looks like it's going lower. But if this pattern is going to govern the action, we could all of a sudden see the market go like that. And people say, I can't believe it went from here to here. Why did it do that? Because there was a pattern underneath there. Now, sometimes we don't know if these patterns are going to hold. Sometimes we see these patterns and then they don't sustain and they fail. But while this thing is still operating under the hood here and is still there and has not been taken out, there is a possibility that we could just stop short here and then go north here. So now I took a very, looks like a risky bet, but I bought a call option here. And I'm going to let this thing tell me tomorrow whether I'm right or wrong. I'm either going to make a lot of money or I'm going to get out. If this thing I'll let this thing make a subtle new low. And then if it doesn't hold and it looks like it's going to leak, I'm going to get out. Now, the nice thing about a call option is that I only risk the premium that I put in the middle. That's the nice thing, versus being, short and, you lose everything, or being long and you lose a lot more than you put up. So this is at an area where I'm going to know very quickly, is this going to be this way or is it going to be that way? And I took a bet that this thing is going to kind of catch in here. Now, there was an area last week where Qualcomm did the same thing, where sometimes you get two bars like this and it looks really bad, where two bars both close right on the low. But this could also be a sly little bottom. And sometimes if the market holds here, you could get a jump. Now, I bought Qualcomm in exactly this kind of look last week. Qualcomm is trading at 119. And I bought it there. It went down $1 and then it went up $8. I bought the calls for $1.20, I think, and I got out for $8. I made 700% on this little price action. And what I'm saying here is that there is the same little collection where you have this double bottom, you're sitting on this little neckline here. I'm trying to just remove some of this distraction. So you've got this, and the last 2 days, you can see that yesterday kind of went down, closed on the low. Today, it went down and closed on the low. So basically what it looks like is this. And so you look at 2 days and they go, well, that looks like it's closed on the low. That looks really bad. But to me, this could turn out to be a bottom. And the great thing is, again, when I fool around with certain trades, is that in my mind, my risk is so small because I'm not going to give this any leash at all. This is either going to work or it's not. And so, I'll let this make a slight new low tomorrow if it's going to do that. And if it just looks like it's going to just, keep going south, I'm going to be gone. So basically, I will have gotten in here and I will have gotten out there. And that's my risk. But if I'm correct, I could see something up there. So now I've risked this much to make that much. And these are the little games that I play all the time, where I try and find pockets in the market where I can find risk reward setups, where there's basically a confluence of patterns that tells me where I can get in and where I can take a peek at the market and where I might be rewarded. So this is the Qs, this is the IGV. Both of these are in downtrends. Both of these look ugly. And I've been shorting them for the last 2 days, taking advantage of this. And now we're at this juncture where, I'm looking to take it for a ride, maybe on the other side. And we'll see how it goes. You're not going to hit the ball out of the park on every trade. And I've suddenly made tens of thousands of dollars just in a nothing market this week. So this is kind of how I use price action. And again, there are so many things going on in this chart where I'm either looking for this to confirm itself or not. And so there's just a lot of things that I'm looking at, in terms of what this price action does or doesn't do, in these areas. And it's just very, very difficult to describe. But at the end of the day, I just look at patterns. I look at levels where, this could be support, that was resistance. So, this was an area, again, there were 2 bars on Thursday and Friday that looked like this right here. Now, in the last 2 days, you've got 2 bars that look like this. So, this did turn out to be a top for 3 days, and I'm going to see if this is a bottom. And so, again, the markets are in a very minute trading range. And so, it's kind of hard for me to explain a trade that, I think is going to be sustainable. Right now, I'm just trying to exploit small moves in the market because that's all that's really going on. So, the markets have just been in a very much of a trading range. I'm more looking for moves like this. So when we can hit something like this is where I can hit it out of the park and just make literally all the bank for a year on one trade. And then this is what the market normally does. It does nothing. So what I try and do is, play around on these little areas, try not to lose too much, and wait for a time where the market is more fertile, where the market starts showing me which way it wants to go, and then I can hop on board, a good trade. And, unfortunately, I can only work with what's in front of me. And there are no really big trades right now. The market's just in a trading range. We're coming to the end of the year. And in the meantime, I was able to carve out some very nice money this week just on understanding where these levels come in. So if you look at this on the weekly basis now, it wasn't a mistake that I shorted this thing going into the week, because you can see that when it comes to this resistance line, it sells off because these are big, bad bear markets. And so selling here was not really a stretch. And so now the real question is, where does this market go from here? We're still in a big, bad bear market, but there are certain patterns underneath the hood on both of these charts that give me pause and say, this might start going the other way. It might. And if it doesn't, then I'm just going to surrender to the will of the market. But sometimes you get into these areas where it's a trap, where it looks like it's a short here, but then you've got to make it through all of this price history over here. And the market sucks you in. It makes it look really good here. And then all of a sudden you wonder, how did it do that? And so there's a lot of subtleties that I talk to our members about every day on what I'm looking for and based on the patterns in the market. So this has been an extraordinarily difficult 3 days for me to explain what's going on. In the meantime, I literally made hundreds of thousands of dollars in a market that has gone nowhere because I understood where these levels were and what they mean. Now the question is, what does it happen? We're in between the support and resistance. And now the market will be the referee. The market will tell me how it wants to play in here. If this thing just keeps and failing, it'll tell me that this thing just wants to go south. On the other hand, if we start breaking through this neckline to the upside again, this could be a fertile move north. And again, the market will tell me. So what I do is I draw these structures and boundaries around prices, and then I watch, how does the markets oscillate? This is still a downtrend, but there is a pattern here. So, it's kind of like walking and chewing gum at the same time. It's holding these two thoughts that, keeps me awake at night. So, you think you're short here and it feels comfortable, but then you got this over there and you could wake up one day and it's like that. So this is why, you need to just understand where you are in the market. And this is a weekly chart, right? So most people are looking at 15-minute charts that give them at best 6 days of history. I'm looking at history going back to all the way to 2019. So I've got 3-4 years of history here to start understanding why the market is doing what it's doing. The market just doesn't stop at certain levels coincidentally. You see these touches. So understanding where the levels are and what the patterns are and what the trend is. And in this particular chart, there is a lot going on one chart. Now, it still looks to me like a bear market. This is still being driven by this pattern. This is still a downtrend, and this still looks like it wants to leak to the downside. But, at some times in the market, when the patterns first start, then it's easy to take out some of these moves. Now, the next one is going to be a grind because you're bumping up against previous history. So everyone says, well, where do you put your stop loss and take profit? It depends where you are in the trend. The more mature this trend is, the dicier it gets in terms of putting on the next push, waiting for that next push. So you've had 3 pushes. Now the next one could be shorter, and then you could be looking like that. So it really depends where you are in the maturity of the trend, what you're looking for out of a pattern. And so, I don't mean to, seem so uncertain, but there's a lot of things that go into, what I do and why I do it. And so this is what I explain. And I don't want to make it seem so overwhelming and so complex, because it really isn't. I'm looking at a picture. I'm looking at a combination of price patterns and price action. And I'm either looking for that action to confirm what I'm looking at, or it goes the other way. So, again, I'm doing a terrible job this week of trying to explain what I do and why I do it, but I assure you there's a method to the madness. Yashin says, does that mean all stocks in that index will go up? No, the S&P 500 is 500 stocks, and it doesn't mean that all 500 need to go higher. So, no. So, are there any questions about kind of either these charts or what I've said? And yeah, again, there is so much going on this chart. This is a down chart, but then there's a bullish price pattern. So now it's, what does the market do? And we don't know. All we can do is look at, how does the market referee? How does it sort this out? So you can see right here, there's a symmetrical triangle going on. So you've got this pattern here. You got this reverse triangle here. You've got this downtrend line intersecting here. And so you've got all of these different intersects. And now I'm just going to observe, how does the market interplay? Does it hold on this line and start going through here? Does it start collapsing underneath this line? And based on how it behaves, and so these are very key inflection points where you hit a certain point along the chart, and it's very important. Whenever it intersects here, you get a very important move. And now the question is, sometimes you get a fake out where it looks like it's going there, and if it starts coming out here, then this would be a breakout above this channel line, and it would start deviating from this behavior. So I watch for all kinds of things. It's not that complicated. It's just hard to explain everything. But here you can see that, I've got a double bottom, I've got a reverse triangle, and I've got this downtrend line. And I'm watching how the market dances around this area. And this is why it's been so chaotic, because the market is trying to sort out what it wants to do. And so I don't have to understand Fed policy or be an MIT economist. I just need to observe how the prices, if it starts breaking out down underneath here, I'll understand one thing. If it starts coming in this area and starts holding, I'll understand another thing. So this is just, there are some times in the chart where, basically you want to get trades that are uncomplicated and go for a ride. The market makes a V bottom and just goes, in a year-long trend. That's easy. Or makes a head and shoulders here, breaks this and starts going lower, and then you can make some easy money in here. This is where it starts getting complicated, where there is no direction. Every day is the opposite of the day before. And you just need to kind of understand what you're looking at, what are the patterns, what are the levels, and what is the price action. And the combination of all of that will give you a clue as to how to trade these things. Do option volumes help determine which way the stock is going to go? I wouldn't have a clue. So you can see what I look at is what I call a clean or a naked chart. There is no volume here. There's no Bollinger Band. There's no MACD. There's no moving average. There's nothing on this chart but price and time. What I try and do is dissect from a picture. So when I saw this double top back in November, I said to our members, it's over. This market is over. It's going much lower based on the observation of a simple pattern. I don't need a Bollinger Band. I don't need a MACD. I don't need anything to tell me what my lying eyes are looking at. So I just try and discern from the patterns and the trends and the price action how to set up my trades. And that's all I'm trying to do is just find little pockets where I can find a risk reward scenario. So it doesn't look like it, but this thing is sitting right on the lower end of this reverse triangle. So to me, you know, I'm going to just put a toe in the water and try and buy it right here on the premise that maybe this is a bull price pattern and then maybe prices will start coming out that way. But guess what? If I'm wrong, I'm going to give this very, very little leeway. So I've got a very small risk for a much bigger upside. Does the shape of a triangle tell if it's a bullish trend or a bearish trend? So these are what I call neutral triangles. So a reverse triangle, what typically happens in a reverse triangle is that prices usually come out of here, give you a false look, bottom, and then go make a new high. Now, I saw that in Schlumberger, and based on a certain pattern in Schlumberger, I told our members when it was at 36 bucks that this thing was going to go and make a new high. So this is what I was looking at. So again, there's all kinds of patterns. And then some patterns like a double top and a head and shoulders, those are reversal price patterns. Then there's a whole bunch of other patterns that are what we call neutral patterns. So this was the stock of Schlumberger. And I told our members to buy it right there at $36. And I said it's going to go make a new high at that time. And you can see it went and made a new high. Now, this was based on the observation of two prior trades that I did exactly like this. Facebook in 2018 and the NASDAQ in 2015. So to me, that's also the value of this education. Why you might consider trading up, signing up to the pattern trader, because what you'll see over time is a lot of different patterns and how they work. And then when you see them again, you can understand them. So I made multiple six figures on this trade in 2000. And so here is the same sequence of events. And this is the miracle of patterns and price trading. So for people who say that price action doesn't work, simply don't understand it. I'm trying to find a specific trade. I don't know where, you know, I've added a whole bunch of slides, so now I don't know where this thing is. Just give me a moment. Here it is. So there was a sequence and this is exactly what Schlumberger looked like. I mean, so this was a chart in another stock in 5 years ago in Facebook, where you can see it put on this reverse triangle price pattern. From the high of 195, it fell all the way to $150, put on a double bottom, and went on and made a new high. So when I saw this same sequence of things in Schlumberger, it's amazing. But this took 5 years, right? So sometimes you sign up and a week later you say, this stuff doesn't even work. It's junk, it's garbage. And then from one setup, I made 7 figures in Schlumberger a couple of weeks ago, based on the same look that you're looking at now. So this is a breakdown of Facebook back in 2018. It broke from a high, put a double bottom. At the time, I bought the stock, made 6 figures, got out of the stock. Then it broke lower. And at that point, I hypothesized that this thing was going to go make a new high. So I bought these way out of the money call options. When the stock was $160, I was buying these call options at $180 and $185. These call options at $185, I remember buying them for 30 cents, and they went to $4.50. 1,500 times my money. And there was the output. So when you see that sequence of Facebook, here was the same thing in Schlumberger. Here was the reverse triangle. So when you say, well, what about these triangles? This is kind of a neutral pattern. Really doesn't mean anything other than how I look at how the market trades within the sequence of that pattern. So you can see, just like Facebook, it broke under here and then put on this double bottom. And so I started loading up on the call options here, and it went straight north. But there was a question about triangles. So this triangle in and of itself doesn't really mean a lot. What I look at is, how does this thing, it breaks down and then it starts breaking above. And it's the sequencing of how it traverses this little pattern that I'm watching. And there's just a lot of subtleties here, but really it goes all the way back to here. This was the governing price pattern. And this was going to govern how prices went into the future. Now you can see that we've got this double top forming, and it looks like we're going to head lower. So that's what prices are. And this is all I look at is price. I don't care about oil. I don't care about OPEC. I don't care about the Ukrainian war. I'm looking at a price chart and I'm making risk reward determinations based on a picture. So Yashvin, it doesn't matter. You can look at these triangles and they're basically neutral. I watch how the market navigates within the context of a triangle. So today we kind of had a neutral pattern on the stock index intraday. And it's just going to be interesting to see how we kind of navigate above and below that. So are there any questions? I'm sorry if I was a little bit obtuse this week, but that's all I've got to deal with. And this is, I got caught out over the last few weeks. I've been in some great positions, but hold on too long. I've learned in the last week to stay in a trade for sure. So, and that's kind of the rub, because you kind of have to trade the environment that you're in. So, for this period of time, when the stocks were going straight up, you could have basically just held trades. Right? When the environment is trending, so you have to be very cognizant of what is the environment I'm trading. And this is a weekly chart, and you can see for the last 8 or 10 weeks, it's just been a banging environment. This is a trending environment, where you kind of break loose and you go directionally. So this is what we all look for. We look for some kind of directional indication, and then we look to get in sync with that direction. And the problem comes when there is no direction in the markets. And unfortunately, that's more the rule than the exception. The markets usually go sideways. we've been spoiled with very directional markets. But you can see that there are whole periods of time where this is a year where the markets don't go anywhere. And so you have to understand what the environment is. And that's why I'm saying it's been very frustrating for me to kind of talk about trades this week, because typically I'm looking for setups that go directionally. And right now the market is sideways. So there's, I have to work with, what I'm given. So you can see again here, you just see this slight little triangle going on here. And then underneath the hood here, you see this little bottom. And now the question is that a bottom? Are we going to make new lows? And that's just the conversation that's going on right now. And the only way to resolve this thing is for the market to tell you. But this, is going to be very difficult to just go through. So if you start coming down in here, I wouldn't be surprised to see, some big rallies on the way. So this is a very complicated area. What I look for are areas where it's less complicated, where it chooses a side and you make a whole bunch of dough just picking a direction. And it goes one way or another for 4 or 5 or 6 weeks. This thing doesn't go in one direction for 3 days. So if you, want to understand more about price action, I really encourage you to sign up for the Boiler Room, because this is really where I break it down every day. And if you're interested, just send me an email. I put the details in the chat box. If you'd be interested in some of our programs, I put a link there. Are there any questions before? So I put a link to the Boiler Room before, but Eduardo, I put in the chat box now an email to message me if you're interested in our programs. Are there any other things? Pat, you're welcome. Before we go, I would really appreciate if you could put a review and let me know what you thought of this. Good, bad, or indifferent. I'll put the link into the chat box here. So Arnie, we have, many different programs. To me, the way I would look at it is you have to ask yourself, what is the value of knowledge? What is the value of education? So first off, if you're considering us, you can go and see what other people have to say. And then I would really appreciate understanding from you in your words. You can just pop a review right there in this link. Let me put the link in the chat box. And I'd really love to hear what you have to say, and other people would if they're also considering signing up. Marlene, you're welcome. Going into the year end, it's seasonal now, and there's just a lot of, it's just very sideways. I talked a little bit about the yen trades yesterday. I think the yen trades look like they're hitting a resistance point. The euro yen, dollar yen, pound yen, but since they've gone up so So again, what I look at is certain patterns and certain price action. And all you can do sometimes is put your toe in the water and see what works. So you can see that the euro yen is at the top of this trading channel. Every time it bangs up here, it goes to the bottom. And so right now we're trading at the top of the channel. And then yesterday you had this key reversal where you made a new high and you close at the low. Now, again, this is where a little nuance comes in. You know, whenever a trade goes straight up like this, it doesn't just come straight down. It needs a little bit of separation. But to my mind, you can start using this risk. So if it starts coming up here, you can kind of short up there. You can kind of sell into this, kind of understanding that, okay, that's where I'm going to put my risk. So this is how I set up risk rewards. I see where we are in the chart. I see certain price action. And these reversals, I call these insurance bars because they kind of tell me where my risk is. So here was a reversal right there. Made a new high, close on the low. And so anywhere in here, I could have shorted that trade with the view that, okay, I'm going to, get short here. And I'm going to use that as my risk. And then you would have had a 500 pip trade. And so this is how I look at charts, through the prism of price structure. And then there are certain times where the markets do these reversals and they tell me where the risk is. And that's the most beautiful thing. I mean, in trading, what you want to always do is know where your risk is. Everyone goes into a trade thinking how much they're going to make. To me, I look at trades as how much do I have to risk? And if I can find a trade where the risk is infinitesimal and the reward is commensurately much bigger, which is exactly the definition of this. So I've made a reversal here. That was my risk and that was my reward. So a 3 or 4 to 1 risk to reward. And that's how you make money in the market, is understanding how and where to get into a trade for a negligible amount of risk and a much bigger offset. Mark, thank you for that compliment, I guess. I appreciate your comment too. Thanks, Mark. I appreciate it. Thanks. So that's how I look at trades, not what the Bank of Japan is going to do, what the ECB is going to do, what Powell's going to say. I look at prices through the prism of what they are and what they aren't doing. So when prices break above a certain area, I say to myself, are prices breaking out and sustaining, or are prices kind of coming back down and failing up here and creating this trap? So prices are always doing something. They put on a pattern and they look like they're going to do something. And then the question is, are they sustaining that, or is it failing? Is that energy starting to fail, where you just start pushing on a string, where just every time it can't go higher? So if you start pushing on a string, very quickly the energy can go the other way. And that's how I think of markets. I think of them in terms of energy. They store energy, and very subtly in this is this top. So, sometimes when you look at all of this, you can't really discern it. But, if you look very closely, there's 2 tops here. And now we're trading underneath this neckline. So, it could continue to bang, but so I just look and see how prices trade. Now you have an uptrend line here, and you can be a little bit conservative and wait to see how this goes. So here's where you have this triangle. Here's the symmetrical triangle. And, it's very probable that this is what you're going to see for a while. And then the more mature this triangle gets, the more it gets into this. This is where the opportunity is. So if it kind of gets here and starts coiling and coiling and coiling, this is where your risk rewards become just vast, where you could take a small amount of risk for a big outcome. But sometimes it takes weeks and months to get there. The markets take a long time to build for that one opportunity where you make all of your money in 3 days. It took 3 months to build that fire. You're welcome, Eduardo. Just stay objective, look at price, and don't listen to your TV. That's my advice to you. So thanks again, everybody. Have a good holiday. If I don't speak to you again, please put a review. I would really like to understand, what your thoughts are. And Frank says, when you keep mentioning seasonal, do you mean markets go up during this time? So yeah, it's very dangerous to think of think of markets that they always do this in this time frame. But typically the markets do rally, but it could be literally the last trading day of the year. That's what I expect. The last day or last 2 days, you could see some berserk price action. But you can't trade with that in mind. You just have to set up your risk reward trades. And don't think about correlations. Don't think about, if things do this, then it should do that. Because, one time it won't, and then you'll lose all your money. So just try and look at the trades in front of you and make risk and reward determinations and stay objective. Don't look at your screen. Don't look at your money balances changing all the time. I never look at my account, never. When I make money, I just toss it into the pile and go on to the next trade. And if I lose money, I look at it in terms, does that trade win? Does that trade lose? I don't look at it in terms of money, because the money balances will start driving you crazy. Every day I'm losing my kids' college education. If I thought in terms of that, like that, I would jump off a bridge. So I just try and look at trades. Is this trade working? Stay in it. Is this trade not working? Get out of it and move on. Thanks. And thanks, Fidel. Thanks, Eduardo. And I'll see you guys at some point, hopefully during our trading journeys. Dwight, thank you for your time, and I'll see you.